Hey everyone, today we're going to be talking about the top 5 food royalty funds to buy. Now, before I forget, if you like this type of content, please like the video, consider subscribing to the channel. It would really mean a lot and help the channel grow. If you own any of these funds or you eat at any of these restaurants even, would love to hear from you in the comments, hear your perspective, what you think of these businesses and these investment opportunities. But before getting into it, I just want to talk about this space as a whole. This is a space that I find very interesting because in a world with higher than normal inflation, lots of costs going up, margins getting squeezed, this is a really unique style of investing or investment that really makes you immune to lots of those factors. First of all, on the inflation front, even if volumes are going down as prices are going up, you're just getting a chunk out of the top line revenue of each of these businesses. So you're not really impacted by any margin headwinds or employee cost increases or anything like that. So it's a very simple business model that you're investing in. And then from just a overall recession point of view, lots of these businesses are discount brands and discount places to eat, where instead of going to a fancy restaurant, people are going to these more casual restaurants or quick service restaurants. So there's usually a lot of trade down into these restaurants to offset lots of the trade down of people maybe eating at home more. So they've tend to have been very recession proof over time, performed very well in all economies except for the sit down ones, maybe not during the pandemic, obviously. But generally speaking, these are pretty safe investments. They're pretty developed businesses, and it's a really straightforward way and easy way from a business model perspective to get monthly dividend income to fuel your portfolio or potentially use that income to pay some bills. So I'm going to talk about my top 5 favorite royalty funds in the Canadian market. We're going to start it off with number 5, which is our Boston Pizza Royalty Fund. Boston Pizza Royalty Fund is currently paying an 8.2% dividend yield. And what I've realized from looking at all these funds is, generally speaking, lots of the restaurants that are more sit-down restaurants tend to trade at a lower valuation. So you're getting a juicier yield just because there's a lot more competition in that space. If we did hit a recession, less people may be looking to go out dining. Obviously, you have the burden of maybe a more expensive meal when you're going out. On top of that, you have to tip and all of those things. So Boston Pizza Royalty Fund has traded at a bit of a discount versus some of its peers, but it's still been a very solid performer over the long term. Another thing to watch out on Boston Pizza Royalty is I believe they do have a lot of exposure out west in Canada. So I think they have a lot of locations in Alberta, which is a bit more correlated to the price of oil and raw materials and stuff like that. So just be comfortable with the exposure of owning restaurants in that economic landscape, depending on what you think is going to happen with the economy. But overall, I think you're getting an over 8% yield that's paid on a monthly basis. So it's a really great way to juice the yield of your portfolio if that's what you're looking for with this one. Going on to number 4, Sur Royalty Income Fund. So this is one that owns a portfolio of brands. Their most famous brand that I think is about 75% of their royalty fund is Jack Astor's. Very concentrated in Ontario, but also opening up stores across the nation. Another restaurant they own, Scatabush, a really popular Italian restaurant chain. Red's is a higher end restaurant. And then they also own the Loose Moose, which is more of like a pub bar. They own a couple other small brands that are also like tuck-in bars and taverns and stuff like that, just that are a couple percent of their business here and there. But I'd say this is the vast majority of it. They've had a really strong comeback from COVID. So they went all the way down to like $3 a share. Now they're up to $17 a share. And I think they're actually paying out less than 100% of their royalty stream. So they may be doing a dividend increase at some point soon. But for now, they're at 6.7%. And I should probably have mentioned that all of these companies pretty much pay out 100% of their income on an annual basis. So sometimes, if they have remaining money at the end of the year, they'll pay a special distribution. But these are strictly cash in, cash out to investors type businesses. Going on to number 3, the KEG Royalty Income Fund. So the KEG's yielding about 7.2%. I think the KEG is obviously a high quality company and stock, but probably a bit less resilient to consumer with some macro pressures. The KEG's a higher end steakhouse relative to some of these other businesses that we're talking about. So people may be a bit gun shy to give them the same valuation as maybe a discount player that may have less headwind in a recession or something like that. But still, the opportunity to get a 7% plus yield that's paid out monthly from owning a great brand and a business that lots of people love going to, like the KEG, still one of my favorite royalty funds to consider investing in Canada. Number 2, Pizza. So this is primarily, quick service restaurant. You order pizza and they either deliver it to your door or you pick it up at the restaurant, or they also have a walk-in business. In Canada, they're in lots of stadiums and special purpose arenas, which is I think about 10 or 15% of their business as well. And then in Alberta, I believe they operate under the Pizza 73 brand, but very similar business. This is a business that is relatively recession proof. Like I was saying before, this is one of those that, you don't have to go in and sit down. It's really casual. Lots of people will, buy more things like pizza for big groups and stuff to save money, if that's the objective. So this is just a very strong business that's been around for decades in Canada and will likely continue to pay out this distribution every single month for the foreseeable future, no matter kind of what the economy throws at us. And going into my number 1 favorite royalty fund in Canada, it is A&W Royalty Income Fund. So this income fund pays a bit of a lower yield because investors value this income a bit more. A&W is a pretty fast growing business in Canada. Quick service restaurant there in shopping malls. They're also in standalone locations. They also have an increasingly high downtown presence in core markets across Canada, and they're growing pretty rapidly. So they increase the dividend actually almost every year. Right now they're paying out about 16 cents a share a month. Last year it was 15.5 cents. The year before it was 15. If I go back about 10 years, they were paying out closer to 9-10 cents a month. So they're growing at about 6% a year on average over the last decade, and it looks like they'll continue to increase their dividend. So lots of things are driving that dividend increase. The first thing is they continue to open new restaurants across Canada. Their current big thing rather is expanding in downtown cores. Historically, they've been more suburbs on the highways, in shopping malls and shopping centers. But they're really looking to bring the brand to, downtown Vancouver, downtown Toronto, downtown Montreal, cities like that in a big way. And that's where lots of their future restaurant growth is mapped out to be. And I think they'll continue having a success in expanding store count. You can see pretty much over 20 years now of same store, or rather location growth year over year, which is really impressive in helping the royalty fund grow. The other thing is they have a lot of very experienced franchisees. So almost 600, so 60% of their locations are from franchisees that own 5 or more restaurants. So unlike, I think, a Boston Pizza where someone may own 1 or 2 and it's very time intensive, that you're doing all the logistics, you're kind of like the GM, you're hiring all the managers, doing all the shifts. These restaurants are a lot less intensive to run, and you can have an owner operator that owns a network of them. And those are very well run. You have experienced management. It's obviously their full-time job and everything they're doing if you're owning like 5+ locations. And I think a strong base of talent in their franchise pool has been one of the fastest drivers of their accelerated store count opening, as lots of these guys are looking to open up more and more restaurants successfully, getting more scale in their franchisee operations, and they're clearly having success in continuing to drive locations for the company in a sustainable way. So you're only getting the 5.3% yield relative to the 7 or the 8%. But unlike some of the other options on the list, which tend to be more stable over time, this is more of like a growth royalty fund where the company's positioned for growth, and that's why the street's kind of valuing the income a bit more. But I think it's good to have a mix of different types of companies in your portfolio. So, maybe if you were to have two of these, you'd pick one with a 7 or 8% yield, and then maybe A&W to realize that growth in income year over year on your investment, not just the big juicy dividend every month. So that's my thoughts on these dividends. I think they're all good options, just depending what region you want to be investing in terms of exposure across Canada, what type of business, high-end business like the KEG, or maybe a discount business like Pizza, sit-down business like Boston Pizza, or quick service restaurant like A&W. It really just depends. But I think they're all great businesses. All will provide you with great cash flow in your portfolio. And I really like the space for some level of exposure in your portfolio. I wouldn't go crazy and over allocate here, but it's a good income provider for any portfolio in Canada. So that's my overall thoughts on the space. Would love to hear your thoughts if you own any of these stocks, eat at any of these restaurants. Let me know in the comments. If you like this type of content, please consider subscribing to the channel. Please consider liking the video as well. Every bit of support helps, and I appreciate it all.